because I said I would show you guys some alternate scenarios, some alternate counts, as opposed to the one that I currently have as my pin post. I'm going to be heading out of town again at the end of this week, and so I wanted to get this out of the way. It's not as detailed as I would have liked it to have been, but I figured it's better than nothing. So I have 4 scenarios here for you. The first being my current pin scenario. Now there's a few assumptions we're making here with these scenarios. The first is that these first 2 scenarios, we're assuming that we are in a triangle pattern right here. In this scenario, it's an A, B, C, D, E. It's important to keep in mind that in a triangle, you can have multiple double combo or triple combo waves here. They don't have to be ABCs. I've illustrated them as ABCs here to make it simple for you guys, but you have to keep in mind that they could be double and triple combo waves, so it's going to be very hard to count these smaller waves within this triangle. That being said, this is the bearish triangle count. Assuming that we are in a triangle here as a wave B, this would be the bearish count, and this is the one that I've posted. Not going to spend too much time on this because you guys are already familiar with how this works and what we're looking at here. Important to know that this particular count gets invalidated if we cross above this level right here, which is the top of wave C. So based on Elliott wave rules, wave E cannot cross the top of wave C, which means if we cross over $10,000 here, this particular scenario gets invalidated. So on to the next scenario. This is going to be the bullish scenario. Now previously I didn't have a bullish scenario that I could stand behind because I wasn't actually aware that we could end a correction, in this case in a triangle. Now I did some research and I found from a website, not sure how reliable it is to be honest, that in a double combo correction, the second correction of the double combo can be a triangle. So in this case we have a double combo being a W, X, and then a Y. The W being a ABC zigzag, the X wave being another ABC zigzag, and this Y wave being a triangle. Now this would mean that at the end of this Y wave, if this really was a double combo correction and we are in fact in a triangle, this means that we would break to the upside and start a new 5-wave impulse at that point. That being said, if this is correct, then we only have completed A, B, and we are in the middle of wave C here, which means that we would still have a D wave and then some sort of a dip for an E wave before we break out to the upside. So that is a little bit different compared to the pin post that I have, in which we've already completed or are about to complete this C wave, this D wave, and we only have 1 wave left. In this other scenario, we have 2 waves left before a decisive move is made. So this is going to be, quite frankly, the only bullish scenario that I can see if we are, in fact, in a triangle right now. So that's a big if. This triangle, there's a lot of debate going on whether or not this is a triangle. It could be a descending triangle, as I've pictured here. It could also be a symmetrical triangle if we were to move this trend line as such, something like that. So a couple of possibilities here, and we don't really know for sure if it is a triangle or not until it makes some moves. That being said, the reason why I believe it's a triangle is because of this volume pattern here. As you can see, we have a declining volume, which is common for a consolidating triangle. We're making higher lows, we're making lower highs, aka consolidation pattern on declining volume. So I'm leaning towards this being a triangle, which is why I have this count here as my primary. Alright, so we went over the 2 scenarios that we had assuming that we were in a triangle. Now we're going to go over the scenarios that assume that we are not in a triangle here. So the first one is going to be the bearish non-triangle scenario. This particular scenario with this particular count was actually pointed out to me by one of my followers, so I'll be tagging him in the comments here so you guys can see who he is. I'm going to give him credit for it. I'm not sure if other people have come up with this count before. I'm sure someone out there has, but he is the first one who brought this to my attention, so I'll be tagging him in the comments for you guys to see. So this correction assumes here that instead of a 5-wave impulse, this structure here is going to be a 3-wave ABC for the first correction, connected by a X wave as the connecting wave, and that will be followed by a second ABC zigzag, giving us our Y wave right there. So this would be also called a double zigzag because we have 1 zigzag, a connecting wave, and a second zigzag. If we look at the targets for this particular scenario, just taking our fib retracement tool right here, measuring the size of the W wave, and then projecting it from the X wave, we get a conservative target of the 61.8% fib ratio of a little under $3,000, right about $3,000. So in this particular scenario, it also gives us sub 4K levels, just like my pin scenario does as well. So both of these bearish scenarios will give us sub 4K levels before this correction is over. Now, this particular scenario can also be made a different way. If you guys have been following me since I had just a couple hundred followers, you'll probably remember the flat scenario that I had posted before this triangle scenario that I made my new primary. So that flat scenario also has us looking something like this here. I'm just going to go over it real quick. It's on my older post. You guys can scroll down and find it if you're really interested. But that flat scenario had us with a 5-wave impulse here, and then this entire structure right here would have been a flat structure, a flat ABC. Our A being a 3-wave structure, our B being another 3-wave structure, and our C being a 5-wave. We have our 1, 2, 3 waves right there, 1, 2, 3 waves right there, and then our 1, 2, 3, 4, 5 being a C wave. This would give us our B wave as a flat correction, and then this would then be followed by another impulse wave down, which would get us our sub 4K levels. Now, the reason, like I said before, that I took this correction out as my primary and replaced it with the triangle as my primary is because this particular pattern here, this C wave right here only went up, if I remember correctly, about 68% of the prior wave, and that is fine for a flat, except it's not as common, I would say. And then the other thing, I did not like how this impulse wave down just was declining volume. So because of this constant declining volume from the start of this structure here, I decided, hey, it's more likely going to be a triangle formation rather than a flat formation, which is why I made the triangle count my new primary as opposed to the original flat. The original flat still isn't invalidated, but I prefer the triangle over this one. Now keep in mind, both this flat scenario and this scenario right here that one of my followers pointed out to me, they're both invalidated if we cross above, again, 10,000 levels. So this 10,000 level is a big deal here because it invalidates a lot of our scenarios. If this 10,000 level scenario gets invalidated, we're left with only 2 scenarios, one bullish and one bearish. The bearish scenario I'll just demonstrate right here real quick. And in the bearish scenario, it's going to go back to that flat structure that I had. This being a 5-wave impulse, and then this being a flat, except this C wave of this flat would then extend up, and we'd have a 1, 2, 3, 4, 5, something like a diagonal or something like that, C wave extending up past the A wave, and then we'd come crashing down for a 5-wave impulse down. And that would be the bearish count, assuming we do cross 10K levels. That's the last hope for bears, which is why, and this could take us as high as 13 to 14,000, which is why for the bears, if we do happen to cross above 15,000, then I'm 100% full bullish. Nothing else will change. However, this is the last stretch, the last chance for bears to keep this down if we do happen to cross 10K. Now, this whole scenario right here, I don't find very likely. I don't think that this is still a flat, C wave of a flat. I don't like how it's taking so long to make these waves here, so I'm not too confident in this. So if we do cross 10K, I'll be a lot more bullish than I will be bearish, but I'll officially be 100% bullish if we cross that 15K level because it eliminates this last possible scenario as a possibility. So that's the bearish non-triangle scenario right there. And then we're going to move on to the last bullish non-triangle scenario. So this is going to be, again, assuming we're not in a triangle, and this is going to be a simple ABC zigzag correction from the 20K level we had here. We have the A wave as a 5-wave impulse, the B wave as a ABC zigzag, and the C wave being a ending diagonal as well as a truncated C wave because it ends slightly before wave A ended. So truncated waves don't happen too often, but they are very possible counts. It does happen. We see it from time to time. It's just not as common as a regular C wave would be. Normally, a truncated wave occurs in a very bullish market, and the fact that we're still not, when bulls are weak here, it makes it seem like this may not be, a truncated C, but the possibility is there, which is why I'm bringing it up to you guys. That being said, this could also make a really nice cup and handle if this does play out this way, where we spiked up. We're correcting now. This is the bottom of the cup here. We'll be going back up here, getting a little sell-off here at the all-time highs, making the handle, and then shooting up. So I like that little scenario, but we're a long way from that, and it's just something that I noticed here. I'm not counting on it. So with this scenario, again, we have our impulse 1 up, 2, 3, 4, and 5. And let me get my volume indicator here so you guys can see why I'm not entirely convinced of this scenario. Again, we have the declining volume, and I've said this before, that's typical of a consolidation pattern and not an impulse up. So that's why I'm more hesitant on this scenario here, although it's very viable, I guess you could say. So this would be the bullish non-triangle scenario. One more thing I'd like to point out, another reason why this is not, another reason why I'm more bearish and why I don't like the scenario too much is because of this tiny little C wave we got here. We had a giant A wave, a small B wave, and a tiny little C wave. Again, truncated C waves, rare, especially with such a small B wave. I can understand a little bit more if we had a bigger B wave that went up to here, and then we got a truncated C that came down to here or something like that. But with our B wave only retracing 38% of our A wave, and then our C wave not even retracing the entire B wave of 38%, it just seems unlikely to me. Again, doesn't mean it's not possible, just not one of my primary counts here. So that's the bullish non-triangle scenario. And again, like I said earlier, if we get above 10K, it leaves us with 2 scenarios. This would be the bullish scenario, and the bearish scenario would be that flat correction that I posted that has us going to about 13 to 14,000 before we come crashing down for our last impulse. So the level to watch here is $10,000. If we can't break above $10,000, things are looking super bearish. And I'm really gunning for that sub 4K. Seems like the most likely scenario. However, if we break 10K, you can rest assured that I'll be a lot more bullish than I am now. And if we break 15K, I'll be going all in. I'll be scaling in above 10K most likely. Above 15K, I'm going to be full into it all over again. So those are my 4 scenarios. Again, we have 2 scenarios, assuming that we are in a triangle, and then we have a few scenarios assuming we're not in a triangle. Due to the consolidation pattern here, again, I'm inclined to think we are in a triangle, which is why I have made this count my primary count. I'll keep you guys posted. This was just a quick video. I'll be going out of town at the end of this week, so I won't be as active as I am or have been. But hopefully this will keep you guys going through while I'm gone. And I'll be updating you guys once I head out of town, going to Alaska for a little vacation. And I'll try and keep you guys posted. So that's all I have for you guys today. Hope you enjoyed my first video. If you guys liked it, give this a like. And I can keep making more of these. I'll be posting these charts as well on my Twitter. And I'll keep them there so you guys can see. And if those who have time for the video, you can follow along with the video to see my explanations. And those who just want to see the charts, they'll be there for you. Looks like a majority of the poll people like the charts, so I'm going to keep them coming. And if you guys have any questions, feel free to comment on the video links or send me a private message. I try to get back to them all. Sometimes I'm a little slow, just super busy with work and stuff. But go ahead and shoot them to me anyways, and I'll do my best to get back to them. Like I said before, I didn't go into tons of detail in these videos. I just don't have the time to go into super in-depth detail right now. But again, if you have any questions, feel free to contact me. And yeah, I hope you guys enjoyed the video. Thanks.